What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today's video, we're going to discuss a potential bullish signal in the form of an inverse head and shoulders on all the indices. We're going to talk about that. We're also going to talk about the bearish case, so make sure you stay tuned for that. Mr. Miles J Creative loves to always be bullish and always tell me that I'm wrong because he stays up with stuff like this, watches, Glassnode and sticks around with all the perma bulls out there. So basically the only reason I'm bringing any of this up is because I'm sure you have seen the entity adjusted dormancy flow chart posted all over Twitter talking about how this thing is bullish and it's just starting to be bullish. And I want you to go and look for this video right here. I will link it down in the description. It is from TXMC at Alpha Beta Soup. He is one of the premier Glassnode analysts. I am subscribed to him and I am subscribed to Glassnode. Those are the only two that I am subscribed to because, to be honest, they give you all the pertinent information that you need to pretty much stay on the right side of the market. But anyways, if you want good Glassnode data, he goes in depth about what this Bitcoin entity adjusted dormancy flow chart is and why it confirms that we are indeed in a bear market. All right, let's go over here to Bitcoin. Let me clean this chart up a bit and we will get started on today's session. All right, so first, what happened last week? Well, last week we were looking for bearish continuation. Let's go to the weekly. All right, here on the weekly time frame, this is where we made last week's video. We were looking for this to close bearish as it did on the CME. We were looking for price to continue, and that's exactly what we got this week. Now you can see that this week's range was a lot smaller than this week's range, but the one thing that this week did do for me is it did confirm this bullish breakout candle as a bull trap. And that is very important because a lot of people got bullish on this weekly candle right here, expecting this to be a Wyckoff accumulation formation. So that breakout trapped a lot of bulls, and now we're below the low of that candle. So as long as price is trading under there, these people are stuck, and that could add fuel to the fire for more downside continuation. Now I'm gonna go over to the CME chart briefly. All right, so here we are on the CME chart. Now you can see that this week, Thursday, because Friday was a holiday, so there wasn't any trading in the US stock market or anything. So the CME futures closed on Thursday evening, and you can see that it closed above a resistance level, an old resistance level. And this level could potentially act as support. Since we closed like that, I'm going to go over here and show you the futures open interest. It's important because now that we are seeing this move lower, open interest is starting to slack off a bit. So that could be indicative of seeing another little pop, but that pop is likely going to be sold into. And here is the open interest put to call ratio. This spikes whenever puts are being accumulated. And even though the market's on the low right now, look at the spike in the puts. Now, the reason we're seeing this spike in puts, even though price is lower, because typically you will see spikes in puts high ends of the markets. So like where the markets turn around, that's typically where you see a spike in puts. But people were so bullish on the, what we've seen happen that they didn't start accumulating puts until this last daily breakdown. That's when they started accumulating puts. So basically looking at a line chart, we'll go into that here just briefly, seeing that bear flag potentially break down. They're starting to add puts to their positions because they're expecting a breakdown as well. Here on the trend score, you can see a little bit less accumulation happening. We were getting that accumulation was firing up, but you can see this week, this past week, that accumulation, the darker it goes, that means the accumulation is not happening. You can see that it is slowing down a bit, which would, be indicative of more downside. So potentially first thing we'll look for is a slight pop. And then if we do get that pop, we're going to be looking to add to our short positions. We're already short. We got short at this wick high. And then again, we got short, the other day. So we're setting pretty on these short entries. All right, back over to the spot price chart. All right, back over here on the spot price chart. Let's go ahead and pull up our weekly exponential moving average. This is the 21 period exponential moving average, not the simple, it's an exponential. I like exponentials better. They are more reactive and they use old price to smooth out the curve, if you will. So yeah, if we were going to look for Bitcoin to continue to be bullish after this breakout, you would have wanted to see this candle close back above that 21. Instead, you're seeing more downside continuation. Now, obviously, there are major weekly support zones not far under price, $37,717. And then the last one before you get the actual final breakdown and that capitulation move will be $36,282. We do have a bear market target of about 26 to 22K, as that would coincide with the volatility expansion as well. And there's a big fat gap down there to fill on the CME chart also. All right, so I'm going to bring up a line chart here just to show you this real quick, and then we'll go on and talk about the bullish things. This is why people are buying puts, or why they're accumulating puts right now. This is a line chart, and line charts are calculated on candle closures. That's why it looks like this. And if you look at a candlestick chart and you put the bear flag low on the bottom of those two swing lows down here, then you're going to be well off of current price. But as you can see right now, you have broken down below the bear flag low. You did once before over here, but this was a bear trap, and it was a obvious bear trap when we took out this candle's high. That let everybody know that anybody that got short down there was stuck and that we could potentially look for higher prices. And we traded this up because if you remember, we were looking for these two swing highs to get liquidated, and that's where we were going to take our profits and look to get short if we saw rejection at the yearly opening range. And we got a yearly opening range test. We made new 2022 yearly highs, and then we rejected. So we got short again. So now we're just sitting in and waiting. And if this thing continues to break down, you've even got a small near-term bull trap on the table right now. And this thing is wedging up down here under this line. I don't put much weight on that line, just to say that it is the bear flag on this chart. And you have broken down below it, and volatility has been compressing. So an expansion in volatility as price starts to break down, you could see a really, really big and, a longer term 2-3 month push down. And then consolidation at the lows, and that's where we're going to be looking to be a buyer again. But anyways, if you want to be a buyer now, if you want to look at those inverse head and shoulders as being a signal, let's go back and talk about them. All right, so here we are. This is the 4 assets that is showing an inverse head and shoulder potentially on the table. You got the Dow Jones Index, you got Bitcoin's got one, but Bitcoin's volume signature does not match that of an inverse head and shoulders. And since it is in a down or an ascending channel, your neckline on that would be the top edge of your bear flag. So you'd have to break out above that in order to say that this was an inverse head and shoulders. And if you do get a breakout above that, the measured move puts you up at around 56, 57K. So I mean, anything is possible. The one thing that I do want to make or to point out here is out of these 4 assets, all 4 of them have that inverse head and shoulders look. The only one that has a volume signature that would say that this is a potential inverse head and shoulders is the SPX. Bitcoin, NASDAQ, and the Dow, none of them do have that same volume signature. So in my opinion, since all 4 of these assets are bearish on the year, meaning they're all trading under their yearly opening ranges, could this be an inverse head and shoulders? Yeah, it could. So how could you play that? Well, it's simple. On Bitcoin anyway, since this is a Bitcoin video, let's go back over here to Bitcoin. Let's go ahead and put the 21 exponential moving average back up and say it like that. All right. Let's get rid of this stuff here. Okay, so basically if you think that this is an inverse head and shoulders and you're looking for an expansion to the upside, wait till you get above that. If you want, since this daily 21 is pretty much in the same place as the weekly 21, the weekly 21s is a little bit higher, but it's really close to the same region of price, $44,000 to $45,000, then just wait for you to get a weekly closure back above that level. I guess the daily is a little bit lower down at under the 43K, but if you wait for a weekly closure back above that, and then the next week happens and the 21 stays intact, then you can look for bullish entries and you can target the 2022 yearly high, or the new 2022 high, I should say. Right there's your yearly high. You could target that, right? If you get above that, you could target that. That's the only thing that I see that is bullish. Make sure you guys trade safe. Make sure you guys trade smart. And as always, happy trading, everybody.